critical analysis of TDS on e-commerce transactions and recent amendments to TCS provisions from CA Narendra Jain is going to handle. And 26th we are having session on ITC, a practical walkthrough covering eligibility and ineligibility by CA BD Chandrasekhar. Members, again note that on 27th we are having an important session from our past president of ICI, CA Sunil S. Talati. It is an opportunity to CA in exports of services. Dear members, kindly make note that one day advance we are sending the link for joining the meeting. That number will going to increase in the month after celebrating our CA day. So on behalf of managing committee members of Bangalore branch, and again on behalf of all the viewers, I wholeheartedly welcome all the viewers watching this today's important session from CA Bimal Jain sir. Uh, Once again, I welcome CA Bimal Jain sir. Before that, I request our Bangalore branch secretary CA Srinivas T to formally introduce the today's speaker to the our gathering. Over to
Thank you,
Srinivas.
Thank you, Chairman, for rendering welcome address. Good evening, sir. I welcome you for this webinar, and I also welcome all the viewers and members for this webinar. It's a very interesting topic on supply under GST, because there is a wide scope and lot of things to be understand in this supply. It's to make us to understand. We have with us eminent speaker, none other than Bimal Jain, sir. It's my pleasure to give a brief introduction of today's panelist speaker, Bimal Jain, sir. Is a by qualification FCA, FCS, LLB with more than 21 years of experience. Is specialized in indirect taxation, GST, service tax, excise, customs, VAT, FTP, DGFT matters, and so many other things. Is a chairman of Indirect Tax Committee of PhD Chamber of Commerce, author of a book on goods and service tax. He is a member of Institute for last 21 years and is a member of Company Secretary from 2006. He is presently the Executive Consultant of A to Z Tax Corp LLP. He is a professional member of so many other this thing, like mentor of Indirect Tax Committee of PhD Chamber of Commerce, Chairman of the Corporate Advisory Committee of IPM Group of Institutions, member of Indirect Tax Committee of ASSOCHAM, FICCI, Special Invitee of Indirect Tax Committee of ICA and ICSI, member of eminent faculty in Indirect Tax Committee of ICI, ICSI and ICMA. Is a keynote speaker at Guinness World Record made by ICSI in largest taxation lesson on GST, attended by more than 4,500 participants, breaking earlier record held by Japan. Business Leader Award from Amity School of Noida, Best Speaker Award of NIRC, ICA, ICWA, and many more accolades to his cap. With this brief introduction, I welcome you once again to the webinar. Welcome you, sir. Over to you.
Yeah, members, kindly make one more note that the today is a 32nd Dhyana Dasova live webcast program, and it is specialty is we are sitting at the capital city of Karnataka. So Bimal Jain sir is distance learning, sitting at capital city of happening city of India, that is from Delhi. That is a true knowledge sharing is happening through this Jnana Dasova. As this COVID has made us challenges, so now it is chartered accountants are overcoming these challenges and turning as opportunities. So if you are calling Bimal Jain sir for any other program Bangalore, then it is difficult for and traveling and schedule and all. But this COVID challenges we have turned it as opportunities. So with that, for that Bimal Jain sir is available for address to our members. We are very much thankful, sir. Over to you, sir.
At the outset, let me thank branch chairman, branch secretary, and all managing committee member of Bangalore branch of ICAI, and my heartiest thanks to each and every individual member who is joining today on this webinar on important topic, supply, the understanding of supply and intricacies. It's my pleasure also that SIRC, Southern India Regional Chapter, Bangalore branch, a biggest branch, all the members are joining today. I will try from my side to make it best of it. I would be needing that all the participants who are participating today, they should also join me. Whenever I'm posting query, they must answer on a chat box. It will not be one-sided presentation. I know that you people are used to look at PowerPoint presentation. I will not give you any PowerPoint presentation. 2 hours dedicated, I would be interacting with you and would be looking forward your active participation. I will try to make best of it. And whatever queries you are having pertaining to GST, rest assured, I will give the reply of those queries as well. So maybe last 15 minutes, I'm parking only for question answer session. So whatever query, if you're having in your mind, you're free to ask. And I will try to give the answer FOC, free of cost. So when I'm starting with a free of cost, of course, I have got question on that, which I will ask little later. But let me start with, as all the participants are joining, my only humble request once again, what you can do, you can take a note of some of the important points which I'm going to deliver today. And those important points would be the pillar for understanding the term supply and the intricacies which I'm going to discuss today for the term supply. Let me start with, see, when GST got introduced from 1st July 2017, we all are aware that 17 indirect taxes merge into one basket. So earlier, if you look at in pre-GST era, central excise was applicable on manufacturing of goods, but paid at the time of removal of goods. Service tax was leviable on rendering of services, but advance received for the provision of services, service tax was leviable as per the POT rule, point of taxation rules. VAT and CST was applicable on transfer of property or title in goods, including deemed sale in terms of Article 366(29)(a). But with the subsuming of 17 indirect taxes, now we are having just one taxable event in GST, and that is supply. Supply of goods or supply of services. See, in GST, when we look at chargeable section 9 subsection 1 of CGST Act, or if you look at section 5 subsection 1 of IGST Act, it says there shall be levied a tax if it is intrastate, then CGST and SGST. If it is interstate, then IGST on supplies of goods or services or both. So meaning thereby, this GST chargeable on supply of goods or services. Hence, it is very important that we must know that what is this term supply means, and that is taxable event in GST. So section 7 has defined the term supply, and whatever definition which is being provided for the term supply under CGST Act, the same is applicable under IGST under section 20, UTGST under section 21, and respective state SGST Act. So whatever I'm going to discuss from CGST Act perspective, that is going to be applicable for UTGST, SGST, and IGST as well. So when I look at the supply, section 7 is important. And section 7 says, so section 7 has got section 7 subsection 1, subsection 1A, subsection 2, and I'm going to touch base all subsection and we'll do number of practical case studies with all of you. And we'll post query for getting your answer. So maybe whatever answer comes to your mind, please write back in a chat box. And let's do both way. I'm from Delhi, you are from Bengaluru, but we are on virtual platform where we can see each other, we can feel each other and try to connect with the topic. topic is supply, but rest assured, I will include certain ITC provision. I will include certain valuation provision. I will include certain time of supply provision. I will include certain place of supply provision in this term supply, and will try to make this topic interesting for all of you. Hope this is the platter which I am offering to all of you. You must be ready to catch hold of it and participate. Whatever best you think you can contribute, please try to do that. Term supply defined under section 7 and subsection 1 start with supply includes. So this is the way the definition is starting. Supply includes. Without defining what is supply, it is starting with an inclusive definition. So first and foremost, intricacies would be that this term supply is not defined. It's kept open for individual interpretation. And then inclusive definition. I'm worried that in time to come, I can tell you, GST will see the lot of litigation. And I can tell you, more than 50% litigation you will see only on term supply. For simple reason that this term supply not defined properly. And starting with the inclusive part, in the one of the apex Supreme Court judgment, Doipac System Private Limited, it is being stated when the word used includes, it expands the meaning, it widens the meaning. Now, I just want you to recall the Central Excise. You know, Central Excise Act 1944. The term manufacture was defined under section 2 subsection F of Central Excise Act. Even you have seen till pre-GST, when GST got introduced, 70 years of Central Excise history, but you will find around 30 to 40% legal dispute which arised in Central Excise. It was only on account whether activity undertaken is a manufacture or not. Lot of dispute, a lot of divergent Supreme Court judgment only on term manufacture. Now, in this given situation, what is very important for all of us to understand, supply, the way it is started, the way the definition started, without defining, includes word has been used. So first, two important things, the term supply is not defined. It is subjective, kept open for individual interpretation. And then it is includes, mean inclusive definition. And how it is going further? It says all forms of supply of goods or services or both. If you stop yourself here, the supply includes all forms of supply of goods or services or both. At least I do not want anything else. I could see that everything is being covered within the definition of supply with these lines used. But the definition goes further. As if Bimal Jain is a new tax person learning the definition first time, let me explain to Bimal Jain. So this definition going further and saying such as. So after inclusive, now exemplary, such as. It includes sell, transfer, barter, exchange, licensing, leasing, renting, disposal. 8 exemplary terms used under such as, but again the irony is none of the term is defined in the GST law. So look at first, definition is subjective. Second, it is inclusive. And third, when example provided, exemplary terms included within the definition, none of the term is defined in the GST law. Then further says made or agreed to be made for a consideration. So consideration can be monetary and can be non-monetary. It can either be paid by recipient or by any other person. This can be consideration for any act of forbearance or doing the activity, and certain deposit if applied for supply of goods or services. So I will explain each of the term one after another. You just listen to me. So consideration can be monetary and non-monetary, made or agreed to be made for a consideration by a person. So they are each provider, but they are not saying to a person. So meaning thereby even the self-service can also be termed as supply. They're not saying to a person, they're saying by a person. So that is what the definition all about. And further it goes to say in the course or furtherance of business. Fortunately, they have used in the course or furtherance of business. So let me tell you the full definition at one go. Supply includes all forms of supply of goods or services or both, such as sell, transfer, barter, exchange, licensing, leasing, renting, disposal, made or agreed to be made for a consideration by a person in the course of furtherance of business. So I have already said it is subjective definition. It inclusive definition gives wider meaning, and 8 exemplary terms which is being used is not defined in the GST law. So let me start with some of practical case study so that I get your answer and we understand this meaning in realistic perspective. The first one, I'm sitting in Delhi, you are sitting in Bangalore. You asked Mr. Jain, give me one opinion for 50,000 rupees. So there are two friends in Bangalore. One friend asked me to give opinion for 50,000 rupees. And another friend who is very close to mine and somewhat he's relative also. Somewhat he's my relative also. And he is falling within the definition of related person. As per explanation of section 15, when the related person is being defined, so he is my related person. So in first case, who is not related to me, price fixed 50,000 rupees. I'm creating two situations for you. First situation, I have offered him my opinion free of cost. I have not charged anything to him. If I have not charged anything, but it is in the course of furtherance of business because I am into GST, I've given my GST opinion to him, that too free of cost. Please tell me in a chat box whether GST leviable. This is my question to all of you. Please tell me in a chat box whether GST leviable. You say yes or no. That is the only answer I'm looking for. You should not write in big term, say yes and no. Okay. Some of the answers now coming in from some of the participants. They started writing yes, no, not leviable. And Radha is saying yes, leviable. Manik Singh is saying yes, leviable. My answer to all of you. GST not leviable unless there is consideration. If that friend is not related to me, in first case study, he's not related to me. I given him GST opinion free of cost. I am not charging any money. Though it is in the course of furtherance of business, but when consideration is not there, GST not leviable. There has to be consideration. Now, if I reverse the case, had it been given to a related person, even without consideration, then GST leviable and para 2 of schedule 1 going to be applicable. So what I have clarified in my first practical case study, if the supply of goods or services without consideration, that may be in the course of furtherance of business, but to unrelated person, GST not leviable. If it is given to a related person, and who all are related person, you may check explanation which is there under section 15 of CGST Act. Even though there is no consideration, GST leviable in terms of entry to schedule 1. So this was the first part. Let's take second part and second practical case study where this point is burning throughout. Now I have given the opinion, I have raised the invoice for 50,000 rupees and paid the GST from my own pocket because GST is on accrual basis. I paid to the government authority from my own pocket. Supplier has paid. Being customer, you tell me, being customer, can you take credit of GST which you have not paid to me? Neither you have paid 50,000 to me, nor you have paid 18% GST charge on 50,000. Can you avail credit? Tell me in your chat box. Can you really take credit? Preeti is saying, no, I can't take credit. Anantnath, I've raised the invoice. Nanda Kishore, I have already raised the invoice, paid on accrual basis. I'm still getting answer yes, no, yes, no. You can all check in a chat box. It is all mixed answer which I'm getting. So it's all Niranjan Laxman is also coming and giving the answer. My answer to all of you. My answer to all of you. Being recipient, being customer, you can avail credit without payment. Only condition, you must pay within 180 days. If you fails to pay within 180 days, value and GST thereon, then being recipient and customer, you need to reverse credit. You need to reverse credit along with interest. An interest rate would be 18% per annum. You can take this credit back whenever you pay this amount to me. So what clarity we got? If being supplier, I have rendered service, raised invoice, paid GST on accrual basis, even though I have not collected. Being customer, you can take credit, but you have to make payment within 180 days. If you don't pay, you need to reverse credit along with interest and take this credit back whenever you pay amount to the supplier. Now, my third angle to this question. Let's say you did not pay at all. You reverse the credit also. Now it is a case of bad debt in the hands of Bimal Jain, supplier. I have rendered the service. I have raised the invoice. I have paid the GST liability from my own pocket. Being my customer or recipient, you have not paid any value to me. You have reversed your ITC since you failed to pay within 180 days. Now you have to help me out because you must be doing this GST practice. Kindly help me out. What happened? This GST which I paid to the government and which I have not collected from my customer, can I get any adjustment or refund of this GST from the GST department? Is it possible to get refund? Say yes or no. So Savit Kumar Rao is saying yes. Manik Singh said yes, yes. Okay, Venkatesh is saying yes. Sridhar Venu is saying yes. Vinay Kumar saying yes. Okay. Now we are discussing very basic issue. It's a complete bad date for Bimal Jain. So I'm getting yes and no, both the answer. I'm getting yes and no, both the answer. Let me tell you, if it is a full case of bad date, believe me, this is the irony of GST law, that being supplier, I will not get any refund or adjustment of GST liability. I will not be given any benefit. So I have not collected the money. I have paid the amount from my own pocket. It is complete bad date. My customer has not paid any amount to me. Being supplier, this GST paid is a loss. You must be knowing there's a concept of credit note in GST. And what is the credit note? Being supplier, I can issue a credit note. I'm giving just food for thought. I'm telling you the provision also. Section 34 is having provision when we can issue credit note. And there are four situations. When credit note can be issued by the supplier. The first situation. Being supplier, if I have shown a higher taxable value than the actual taxable value. So if actual is 100, and if I have shown 110, then to the extent of 10 rupees, credit note can be issued. Or I have charged excess tax, let's say 20, as against actual tax, which is 18. For 2 rupees, credit note can be issued. And when there is deficiency in goods or services, deficiency, and for deficiency, some part amount is not released by the customer. So for deficiency in goods or services, and last condition, when there is return of goods, the word used, return of goods. So there is no concept of return of services, no concept. So what happened? My GST is a loss. Look at the irony, the way things are going in GST. Now, I'm telling you one jugaad. This jugaad is a Hindi word which is called managing the transaction. When it is complete bad debt, Bimal Jain is not getting any benefit. But when you manage this transaction by way of jugaad, you can get some relief. But that jugaad is not legally acceptable, but somewhat we can always do. Let me share this jugaad with all of you. and I can get the benefit. In such case, when you're not giving me the payment, I will come back to you and will say, Mr. A, you're not making me any payment. Do one favor for me. You release 1% payment of 50,000, just one person, which is 500 rupees. And make payment by way of check. And rest assured, I will repay this money in cash to you. So for you, you're not paying me anything. You're only paying 1% by way of check, which I'm repaying back in cash to you. Now I can make out my case under deficiency of service. And once I can make out my case in deficiency of service, then I'm being allowed to issue credit note, and the GST which was paid now can be adjusted. So see, with one managed transaction, I'm in a position to get adjustment, but for return, bad debt, so this is big burning, one of the criteria. Now, hope I just want to see in a chat box, yes, you got the point which I conveyed to you. So you can write down, yes, you got it. Can you say something in the chat box? Yes, you got it. Okay, perfect. You got it. So Manik is saying, Sabit is saying, Rekha Parekh is saying. So all our maximum are saying yes. All right. Now next, the same question. Yes, Jugar. Okay. So Anant Kumar is also saying yes, sir. All right. Now next, let's say if I give you FOC services free of cost, and you are not related to me. You are not related to me. We have concluded that GST not leviable. But do you see any impact on my ITC, input tax credit? Because I would be having two kind of services. One which is taxable, GST levied, GST discharge, and this where consideration is not received. No GST charge on this transaction, but there is common ITC, input tax credit. Do you see any impact on this transaction for reversal of credit in terms of rule 42 and 43 of CGST rule? Please tell me. I'm asking you, please tell me. Do you see any impact for the reversal of common ITC? You can say in the chat box, yes, reversal would be required, or reversal need not be required. If it is common ITC used for this services, whether reversal would be required or not. So now I'm getting some answer from some of the participants as well. So Srikanta Prasad is saying that in absence of exempt services, ITC reversal not required. Now my answer to all of you, reversal in terms of rule 42 and 43 is required only when this is going to termed as exempt services, right? Exempt services. And what is exempt services? Which is either nil rated. Nil rated means that is chargeable with the nil rate, or which is exempted by way of exemption notification. So goods exempted by 2/2017, services exempted by 12/2017, or which is not taxable in GST law. What is not taxable in GST law? Alcoholic liquor for human consumption and 5 specified petroleum product. 5 specified petroleum product. Now just you have to look at the transaction FOC, free of cost. This is per se is not supply. If it is not supply, where is the question of its taxability and then exempted? And then it is warranting reversal in terms of rule 42 and 43. I've given you the clue. I hope you got my point. When this FOC supplies, which is not fitting in with the supply definition, where is the question of its taxability and then getting exempted? Rule 42 and 43 comes into the picture only when it is exempted supply. It is exempted supply. So I hope you got my food for thought. After listening this food for thought, what is your answer now? Do we require to reverse ITC? Do we require to reverse ITC in terms of rule 42 and 43? Say yes or no. Okay. So G. Sivakumar, Indra Kumar Solanki, okay. Asan Bansal, Sampath Kumar Ringa, okay. I can always argue that when this is not a supply, where is the question of being exempted and reversal required? Nevertheless, I've given my food for thought, but to make it more endorsed, to make my statement more endorsed, let me take 3 case studies from Schedule 3 perspective. And what is Schedule 3, by the way, in GST? Schedule 3 means certain transaction which is neither a supply of goods nor supply of services. I hope to that level you understand the GST law, that there are 8 entries in Schedule 3 which is neither a supply of goods nor supply of services. Let me take 3 transactions. And one of the Gujarat advance ruling has come on one transaction. Karnataka is also on forefront. Lot of advance ruling comes from Karnataka as well. The transaction is, let's say you are registered in Bengaluru. You are registered in Bengaluru, Karnataka. You got some customer in US and he wanted a particular goods from you. Now you got some vendor in Korea who can supply these goods directly to your customer in US. So what happened? You got customer in US, you got vendor in Korea, you're asking your vendor, supplier in Korea to supply these goods directly to your customer in US, to customer in US. So goods are going from Korea to US. You got 2 transactions. Korea vendor going to raise invoice on you at your Karnataka saying that bill 2 shipped to US, and you will get another invoice to raise to your US customer for supply of goods made to US customer. So there are purchase transaction and there is sell transaction. And there is recent one Gujarat Advanced Ruling Authority. I will connect that advanced ruling also. And we'll try to see from a supply perspective. In this supply definition, it is clearly stated that whatever is falling under Schedule 3, which is neither a supply of goods nor supply of services. Now, my first question to you, when a vendor from Korea raising invoice to you at Karnataka with a GST leviable, please tell me in a chat box whether GST leviable. Please tell me in a chat box, yes or no. except one or two guys, I got the answer. And they're saying GST leviable. My answer to all of you would be no GST. No GST. Till the time goods crosses custom frontier of India. Till the time goods crosses custom frontier of India. No custom duty, including IGST. So on purchase, no GST leviable, rest assured. Now we are talking about sell transaction. Sell. Goods are being shipped from Korea to US. You got sales revenue on credit side of your PL account. Whether GST leviable, next question, please tell me whether GST leviable. It is not high C sale, Srikanta. It is not high C sale. It is called merchant trading in non-taxable territory. Yes, merchant trading, correctly said. It is not export also, Sumedha. Sumedha, you're saying it is export. It is not export also. Now listen my answer. It is not export for simple reason. Export means when goods are being taken out of India. Goods are in India and then taken out of India. That is called export. But these goods are not in India and not taken out of India. These goods were at Korea, and from Korea it has gone to US. So this is called merchant trading in non-taxable territory. In non-taxable territory. It is para 7, entry 7 of Schedule 3 transaction. Schedule 3 transaction. It is neither a supply of goods nor supply of services. Let me take another example, then I will conclude everything at one go. Let's say I've imported. I'm creating second example, so do not get confused. First part, first example of merchant trading, I've said it is not chargeable to GST on purchase and not chargeable to GST for outward supply also. I'm taking now another example. Let's say I'm importing certain goods from Singapore. You are a Korea based. Sorry, you are Karnataka registered, Bangalore registered. You are importing certain goods from Singapore. You're registered in Bangalore, Karnataka, importing certain goods from Singapore. When goods are on high seas, you are importing at $100. When goods are on high seas and not entered into custom frontier of India, you have sold these goods to Bimal Jain at $120, at $120. So originally you were importing. When goods were on high seas, not entered into custom frontier of India, you sold these goods to Bimal Jain in Delhi at $120. So when these goods are going to be imported, final bill of entry going to be filed by Bimal Jain only. You are not going to file. So you got your purchase of $100, you got sell of $120. Neither is taxable. Nothing is taxable. Bimal Jain filing bill of entry for home consumption. He will discharge the custom duty, including IGST, on value of $120. On value of $120. So in your hands, Karnataka registration, neither purchase was taxable nor sell was taxable. And third transaction, which is called in-bond sell. In-bond sell. Let me tell you what is this in-bond sell. You imported the goods, being Karnataka registered, you import it, and you have stored your goods in bonded warehouse, custom bonded warehouse. While your goods were stored under custom bonded warehouse, you file in-bond bill of entry. In-bond bill of entry. You import it at $100. Now you're selling such goods to Bimal Jain at $120. Then Bimal Jain filing ex-bond bill of entry. Ex-bond bill of entry. So Bimal Jain ultimately will pay custom duty, including IGST. But transaction in your hand, $100 for purchase, $120 for sell, it's not taxable in GST. So I given you three transactions: merchant trading in non-taxable territory, high C sell, in-bond sell. Para 7 and para 8 got inserted in Schedule 3 effective from 1st of February 2019. Now, I'm sure that a lot of participants must have seen this recent Gujarat advance ruling. And as per recent Gujarat advance ruling authority, merchant trading, when supply of goods happening from Korea to US, they have said purchase is not chargeable to tax because it is not moving into custom frontier of India. But sell is liable to IGST. Sell is liable to IGST. I'm of the opinion, and I have made one video, small video on this particular judgment, which is there on my YouTube channel. You may subscribe to my YouTube channel for watching all regular update, regular video, and these are all coming free of cost, rest assured. So what happened? Whatever this advance ruling authority has decided that GST leviable on sell transaction, I've said it is not chargeable to GST for simple reason that this is merchant trading in non-taxable territory. Cannot be made taxable. Second argument could be that this para 7 and para 8 got inserted from 1st of February 2019. Can it be applied retrospectively? I'm of the view, and in my humble opinion, anything which is clarificatory in nature will always get its reference from the retrospective date. And that was the understanding. When GST got introduced, it was hugely and highly debated for high C sell transaction, merchant trading, in-bond sell. It got certainty when got inserted in Schedule 3. So it is clarificatory in nature. When something which is clarificatory in nature will always draw its reference from origin date, retrospectively applicable. So these three transactions, though you are having sales revenue on credit side of your PL account, no GST leviable. Concluded. My next question to all of you: what happened? Are you supposed to reverse common ITC pertaining to these three transactions on which no GST charge? Can we say it is exempt supplies? Hence, reversal of common ITC warranted in terms of rule 42 and 43? This is my question. And I want in chat box that maximum of you must write the answer. Maximum of you must write the answer. Please tell me. I want that you should be active on a chat box. Okay? Not required. Okay? 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 Balaji saying no. Ananta Krishna is saying no. All right. So Binay Kumar is saying no. Perfect. Sampath Kumar saying no. Okay. If you are saying no, no reversal required, then when FOC supplies made free of cost supply opinion to unrelated person, which was not a supply at all, which was not a supply at all, where is the question comes, it become exempt supply, and you people, some of you have answered reversal of ITC. Please, now tell me, FOC supplies, do we really require to reverse common ITC when per se it is not a supply? Where is the question of its taxability and then getting exempted and then warranted reversal of ITC in terms of rule 42 and 43? Now please tell me. So what is your answer now? Do we require to reverse ITC for my FOC supplies? Please write down. Please write down now. So all of you now, all right. So I said, just wait, I will get you connected. And now you got the topic connected. This is the important aspect, right? And this is what I said that I will tell you. So I was only on section 7, subsection 1, clause A. Let me do one more analysis. Let's say I get, you see, there are long construction contract. When we entered with public sector undertaking, we used to get mobilization advance for supply of services. Works contract services in GST is in relation to immovable property, right? So that is also called supply of services contract. Let's say you get huge mobilization advance, 10 crore rupees. Whether this mobilization advance per se is chargeable to GST because it's an advance for supply of services, whether GST leviable, please tell me. Please tell me. Whether GST leviable. So Manik Singh is saying yes, GST leviable. Sampath Kumar is saying GST leviable. Everyone is saying leviable. Now my next, all right, not an issue. Listen to me. I want to do some tax planning with all of you. I want to do certain tax planning with all of you. I do not want to pay GST on this mobilization advance. If I take this advance as a deposit, park this money in a particular escrow account that may be secured by way of bank guarantee, why this mobilization advance normally and generally given in the trade? So that you can mobilize your resources to your plant site. For that only this mobilization advance given. But we are hesitant sometime why we should discharge GST when nothing is being rendered, no service is being rendered. Can we do one tax planning? And I want you should also tell me You have given me 10 crore rupees. I'm your supplier. Let's assume I have parked this 10 crore rupees in a particular escrow account, a separate escrow account. And this escrow account, I kept this money only for the security of my customer, that I'm not using this fund. I will use this fund, appropriate this fund only when I will start giving the services, start providing the services. So there is one concept. It is one concept in GST, deposit versus advance. If something which take colors of deposit till the time appropriated, and when you read the consideration definition under section 2 subsection 31 of CGST Act, when you are going to read this definition, I can tell you in this definition they have specifically said deposit till the time appropriated. Deposit per se is not chargeable to GST. It is not a consideration. Till the time it is deposit, it is not considered as consideration, GST not leviable. When deposit gets appropriated towards supply, then only it is consideration, and then GST may be levied. Now, here, after reading all this analysis which I'm telling you, now you will always say, sir, how to differentiate between deposit and advances? What is the mode of refundable deposit versus non-refundable deposit? If it is refundable deposit, no way, it is not advance, no GST, because ultimately it is refundable deposit. Only in case of non-refundable deposit, you can say GST may arise. So your fact of the case, your factual position, going to play important role. I just given food for thought for your understanding sake, so that you can understand. So having said this, let me move to second subsection 7(1)(b). 7(1)(b) says import of services for a consideration, whether or not in the course of furtherance of business, whether or not in the course of furtherance of business. So 7(1)(b) saying, Bimal, if you import services by making a payment of consideration, whether it is personal purpose or business purpose, GST leviable. Come to 7(1)(c), it is now very, very important, and here we are going to do 2-3 case studies. Very good 2-3 case studies. In 7(1)(c), Schedule 1 is being kept. And Schedule 1 is nothing but 4 specific entries, para, even though without consideration, it would be deemed supply. It would be deemed supply. So I'm saying 4 entries in Schedule 1, even without consideration, GST leviable. So what is the first entry? Permanent transfer of business asset on which ITC input tax credit is being availed. One line. I will do 2 case studies only on this one entry. Permanent transfer of business asset on which input tax credit has been availed. Even though no consideration, customer is not paying any amount, recipient is paying no amount, still GST leviable. It is called a deemed supply. Deemed supply. Am I clear? Now, let me take example and then discuss with all of you. I'm a company and I got laptop purchase for business sake. 50 laptop we have purchased and we have availed a credit. After 3 years of utilization, Bangalore is called IT hub. So maybe many IT companies are purchasing laptop, and after using 3 years, 4 years, they're scrapping laptop and then giving it to NGO, free of cost, not charging any amount. Please tell me whether GST leviable, say yes or no. Tell me whether GST leviable. Okay. All right. So the GST leviable, after 3 years, there's one guy, one participant I do not know, he said rule 43. Rule 43 goes up to 5 years. 5 years. Yes, GST leviable. ITC for unused life. To that extent, you need to reverse the ITC. Unused life. Okay, next example. I'm a company, TCS, Infosys. I purchased a motor vehicle for my employee, directors, CEO, CFO. And maybe after 3 years of usage, I'm giving these car to some NGO or to some other body without consideration. No money charged. So motor vehicle purchase. After 3 years period of use, these motor vehicle given to NGO without consideration. Whether GST leviable, please tell me whether GST applicable. So I'm getting mixed answer from all of you, but let me tell you, when motor vehicle under section 17 subsection 5 clause A, on purchase when you pay GST, credit is not available. Credit is not available. So on purchase of motor vehicle, you have not availed the credit. You have not availed the credit. Now you're selling, we are giving this car to NGO without consideration. Without consideration. Whether GST leviable, your answer should be no GST. No GST. Why you have said yes, I do not know. Some of you have said yes. I can go back and say who have said yes. Like there is Sukrutu Segu said yes, SN Bansal said yes, some Beneath Loda said yes. Why it is yes? No. GS Sivakumar said yes. No. Because ITC was not taken. Please, I really want good answer from all of you. I really want good answer. You need to really listen to me carefully. Now, let's say third practical case study. I've said when there is no consideration charge. But if let's say this company charging some money on these motor vehicle after 3 years of usage, on which no ITC was taken, selling these cars after 3 years and charging some money. So consideration is there. So it is not schedule 1 transaction now. Tell me whether GST leviable. GST leviable. Please tell me GST leviable. Yes, GST leviable. GS Sivakumar, please. GST leviable. Yes, we have to go back and check the provision, section 18. of CGST Act. It is higher of 2. GST on transaction value or credit to the extent of unused life. That is what the GST chargeability, and for motor vehicle, there's specific provision, 12% or 18%, depending on that car, make and everything. So I'm only saying when consideration charge, it is in the course of furtherance of business, GST leviable. So this was entry 1, schedule 1. And now I'm going to do very much important. Entry 2 and schedule 1. What is entry 2 and schedule 1? I will request participants. Now all of you are with me giving your answers. I'm really liking it that you are really tuned now and trying to give your answer best. So now this is second, and this is very interesting, and this is the burning part of supply. Entry 2 of schedule 1 says supply of goods or services between distinct person. And who is distinct person? I will tell you. Or related person in the course or furtherance of business, even though there is no consideration, if supply of goods or services between distinct person or related person in the course or furtherance of business, GST leviable. GST leviable. Now let me tell you who is distinct person. And for that, let me start with a practical case study. Section 25, subsection 4 and subsection 5 of CGST Act. Let's say I got 4 manufacturing plant in Karnataka. In Karnataka, I'm just creating your situation. In pre-GST regime, I just want you should apply your mind from pre-GST perspective. 4 manufacturing plant in pre-GST regime, all in the state of Karnataka. We were having 4 central excise registration. That was the scenario in pre-GST. When GST got introduced from 1st July 2017, we were given the option. What option we were provided? That Bimal Jain, you need not require to take 4 registration now. You can take just 1 registration for 4 manufacturing plant in 1 state, Karnataka. You can take just 1 registration. So maybe 1 is the principal place of business and 3 is the additional place of business. Now, when I'm merging 4 manufacturing plant under 1 registration, my simple question to you, can we say they are distinct person? Please tell me yes or no. Can we say they are distinct person? Please tell me. Say yes or no. C.A. Santara, Balaji, no. Indra Kumar, no. Jagannath, no. Sorry. No. All right, CP Ithirajan, okay. Vijay Kumar, Ajit, okay, all right. Since they have not taken separate registration, they are all under 1 registration. 1 is the principal place of business and 3 the additional place of business. No separate registration taken. For registration in 1 state, they need not require to have 4 registration unless they want to have separate registration as per business vertical. The business vertical concept was provided, but this business vertical concept is got amended from 1st February 2019. Now for different place of business in one state, you can have multiple registration, but it's your choice, not compulsory. It's your choice. So what happened? You have taken just one registration for 4 unit. You are not distinct person. You are not distinct person. But if you take 4 separate registration, then you are distinct person to each other. Then you're distinct person to each other. Please tell me this one line which I said. If you have taken one registration with 1 place of business, principal place of business, and 3 additional place of business, then you are not a distinct person. But if you take separate registration for 4 unit in one state, you become distinct person for each other. Have you understood this line which I said? If you understood, say yes. Have you understood this line which I said? All right. Now, all right. Now it has got implication. What implication? You know, in GST, stock transfer of goods, pre-GST was not taxable, Form F. But in GST, stock transfer of goods or stock transfer of services, which is called supply of goods or supply of services, between distinct person, chargeable to GST. Now, having said this, let me take your test now. Your test starts now. If I have taken just one registration for 4 unit in one state, 4 unit in one state, just one registration, and stock transfer made from A unit to B unit, whether GST leviable, tell me, this is the only thing, whether GST leviable, not leviable, yes, right, not leviable, good. If I've taken separate registration, for 4 unit, GST leviable because distinct person, all right. Let me change this example a little further. Now these 4 unit is not only in Karnataka, they are in different states. One in Karnataka, one in Tamil Nadu, one in Kerala, one in Andhra Pradesh. We were having 4 central excise registration in pre-GST. Now 4 different manufacturing plant in 4 different states. We can't take one registration. Now we have to compulsorily take separate registration per state wise. This is the clarity. So 4 manufacturing plant in 4 different states, I need to take separate registration and we become distinct person to each other. Hope you got this meaning well. Now if A registered unit of Karnataka stock transferring goods to B unit, registered B unit of Kerala, GST leviable. Please tell me whether GST leviable. Yes, GST leviable. All right. All right. We are distinct person. Next. What would be the valuation? What would be the valuation? Rule 28 of CGST rules talks about the valuation. You have to take as open market value like kind and quality, 110% of cost of provision, or residue method. And that two proviso in Rule 28. What are those proviso? Listen very carefully, because I am looking answer from you only. So you have to really give me the answer. The first proviso says, Bimal, if I'm stock transferring from Karnataka to, you can say, to Tamil Nadu, Karnataka to Tamil Nadu, what value I should consider at the hands of supplier in Karnataka? Proviso says, Bimal, if these goods are going to be sold as such, by the Chennai recipient unit, by the Chennai Tamil Nadu recipient unit, then Karnataka supplier can pick up 90% of the sell price of Chennai unit, when Chennai unit selling these goods as such to unrelated person. So I've tried to make it very, very clear. If Chennai unit selling these goods as such with no manufacturing, nothing like, as such to unrelated person, then Karnataka supplier can take 90% of sell price of Tamil Nadu unit. So if Tamil Nadu is selling at 100 rupee each, what is the price Karnataka can take up as a valuation for chargeability of GST? Please tell me. No, Sampath Kumar, kindly listen to me very carefully first. 90 rupees. 90 rupees. Yes, 90 rupees. Second point. The second proviso says, if recipient unit is eligible for ITC, let's say Tamil Nadu is eligible for ITC, then whatever value mentioned on the invoice by Karnataka can be considered as a deemed open market value for supply of goods or services. So this meaning, if I'm taking any price when I'm supplying from Karnataka to Tamil Nadu, that would be considered as deemed open market value, but only difference is this second proviso can be picked up for goods when certain value addition is being done by recipient unit, not sold as such. If it is sold as such, then the criteria would be 90% of the selling price. If it is being done with the value addition by recipient unit, then Karnataka supplier can pick any price, maybe rupee 1, for chargeability of GST. So I'm just creating a difference. The goods are being sold as such, and goods are being sold by Chennai after further processing. So two different proviso going to be applicable. I just want from the audience, yes, you understood it. You understood the difference of these two proviso. Please tell me yes. Perfect. Yes, that is what I wanted. All right. Now, coming to the service sector. Now, this problem is majorly on service sector. What is the problem in service sector? That we haven't heard of stock transfer in service sector. We have heard about stock transfer of goods when we are engaged in supply of goods. It is understood, and we were knowing this concept in pre-GST era. but we haven't heard that there is certain concept called stock transfer in service sector. So let me take one example, and this example, let's say in Bangalore, you got one head office. In Bangalore, you got head office. And you got 6 other branches in different state, Bangalore is the head office, 6 other branches in 6 different states. As per GST law, I need to take separate registration if it is in different state. So we become distinct person to each other. This aspect is clear to all of us. Now we all understand this aspect. Now since there are 6 branches, 1 head office, there are 7 separate registration, and they are distinct person to each other. Now question is, your CEO, CFO, your common HR team, IT team, accounts team is sitting at head office Bangalore. Now, are they providing, whether this head office is providing any services to 6 other branches in different state and registered separately? This is the question. Whether there is any supply of service by HO, head office, to the 6 separately registered unit. Tell me, whether supply of service is there or not. Please tell me. It is not similar to ISD. No way. Yes, there is supply of service. There is supply of service. And this judgment is Columbia Hospital coming from Karnataka Advanced Ruling Authority only, and affirmed by Appellate Authority under advanced ruling for Columbia Hospital. Supply of service, supply of service. Now, next question will come. If it is supply of service, what the valuation? What valuation need to be considered? When HO going to raise the invoice to the 6 separately registered unit in 6 different states, then that proviso which I provided to you, Rule 28 says open market value, like kind and quality, 110% of cost of provision of services, or residue method, and there's a proviso if recipient unit is entitled to avail ITC, then head office can pick any value, even ₹1, for raising invoice for supply of services to the recipient unit. And this price which is being picked up by the supplier would be called deemed open market value. Deemed open market value. So only until now, whatever I've said up till now, you say you got it. Say yes, you understood it. You tell me yes, understood it. I will then further add up. I will then further add up. Until now, you understood it. Yes. Okay. Okay. All right, you understood it. Now next. If it is, Madam Preeti, please appreciate my position as well. Please come once again. This line writing, please come once again, is very easy. Try to understand how much pain I'm taking to explain to all of you. Rather, I will request you guys, please concentrate once again. Please keep your concentration again and again. That will help me to pass on my topic to you. Sorry, Preeti, time is the pause. Allow me to go further. But my request to participants only that sometime on webinar, recipient becomes casual. And that's the reason. So please go all along with me and let me carry on. Listen. If recipient unit is not eligible for ITC, maybe they are engaged in exempted supplies like hospital, healthcare services, or education services. If recipient unit is not entitled for availing credit, can supplier head office pick ₹1 for chargeability of GST and that would be deemed as open market value? Tell me, possible or not? Yes or no? Tell me yes or no. No, Mr. Jagannatha, no way. It's not applicable. You can't pick ₹1 in this case because recipient unit is not eligible for availing credit healthcare services or education services. No. Then what you have to do? Either you have to choose deemed open market value or like kind and quality or total cost. Total cost. So total cost of head office to be calculated and then apportioned to the 6 branches. This is the irony now. Now in this total cost, when I'm talking about exempted supplies, whether we need to include salary cost of CEO, CFO, common HR team, accounts team, IT team, do I require to include salary cost in the total cost for raising cross-charge invoice to my 6 separately registered unit when we are talking about they are engaged in exempted supplies like healthcare services? So my question once again, do we require to include salary cost in the total cost? Please tell me. Do we require to include salary cost? Okay. Okay. Now here, irony, and that would be like, very tricky situation. If I include salary cost and apply GST, then recipient unit will not get any credit being exempted supply. Why they would be interested to include salary cost? Is it not cascading, creating cost? Second, salary which is neither a supply of goods nor supply of services. Entry 1, Schedule 3. Entry 1, Schedule 3. Why we need to include salary cost which is neither a supply of goods nor supply of services? Can't I argue and say that salary which is not taxable, why should I include? By including it, I'm making it taxable, which is otherwise not taxable. Repeating again, salary cost, which is neither a supply of goods nor supply of services. If I include, is it not that I'm taxing something which is otherwise not taxable? It is not taxable per se. So this argument still exists and need to be tested, which is not yet tested, and we may have divergent perspective divergent opinion from different GST expert pan-India. I can always say which is not taxable directly, you cannot make it taxable indirectly. There's a legal jurisprudence. But to arrive at total cost, when I say it is not complete till the time you add salary to it. And this is burning issue adjourn date. This is the burning issues adjourn date and creating a tussle. Wherever it is meant for taxable supplies, recipient is eligible to avail credit. No challenge, no problem. You include salary costs, do not include salary costs, no problem. Problem only lies with the exempted sector, like healthcare and education. So Columbia Hospital advanced ruling upheld by appellate authority is burning adjourn date, and we all are looking clarity from the government. But you know how clarity comes from the government and how the confusion is being added up for this problem which is arising adjourn date. I can very well argue, and it is my one of the defense, that salary cost which is not taxable directly, by including it, you are making it taxable. And that too for exempted sector, it is creating cascading. Next in this line, we normally get confusion. What is cross charge versus ISD? Cross charge versus ISD. Next question which I normally get in the market, that cross charge and ISD. Cross charge means when you're supplying services. ISD is a different concept altogether. ISD is what? Input service distributor. At head office in Bengaluru, you may be procuring lot of common input services. And these common input services are commonly utilized by 6 units in the same example. So GST charged by a vendor to a HO in Karnataka. Now, if HO is not registered, so HO may be two-way registered. One is as a regular registration, another one is called ISD registration. ISD registration is a separate mechanism. And this ISD registration is what? When you're procuring common input services at HO location. And these services are commonly used by your other respective unit. Then you may require to take separate ISD registration. And then you can distribute this GST credit which you have taken on purchase, inward supply of common input services to the respective unit, either in terms of their utilization or turnover ratio. These are the prescribed mechanisms to distribute the credit. To my mind, cross charge and ISD are two different concepts. Now, you can always debate and say, can I take ISD into my cross charge? There may be one of the way to look at the transaction. Yes, I have taken common expenses as a part of total cost and then cross-charging to my respective recipient unit. May be possible way, but valuation for recipient, if taxable, if not taxable, these are divergent perspectives. When recipient is entitled to avail credit and when recipient is not entitled to avail credit, only alarm H. In cross charge, it may be possible that you may avail credit even on input, but in ISD, you cannot avail credit on input. So to that extent, it is a loss in ISD. But for cross charge, you can avail credit on common input services, even on input for cross charging to the respective recipient unit. So this is what you have to really understood from your business angle, whether recipient unit is eligible for the credit or not eligible for the credit. So this was on pertaining to distinct person. Let me do the last part, employer and employee. Then I will open the floor for question answer session. Last part, employer and employee. As per explanation, employer and employee are related person. And let me take one case study and ask with all of you, what is the answer for this particular practical case study? Let's say I'm a company, TCS, Infosys in Bangalore, and I have engaged outdoor caterer for preparation of lunch and dinner for my employee. And this outdoor caterer is charging 100 rupees per thali, per pax, 100 rupees. Infosys now in turn may have two options. One option, that Infosys may offer lunch and dinner free of cost, FOC to employee concerned. One option. Second option, no, they are charging subsidized rate. Let's say 20 rupees per thali, which is procured at 100 rupees, but subsidized to 20 rupees, and it is being recovered from the employee concerned. From GST angle, we have to look at this transaction. When supply of service between related person, employer and employee are related person. When you're not recovering any amount, no consideration, though it is in the course or furtherance of business, whether GST leviable, this is the question, whether GST leviable. So I'm posting this query to all of you. When no recovery made, it is F4C for lunch and dinner, though it is between related person in the course of furtherance of business, but no money charged. With a GST leviable. Okay, so I'm getting mixed answers. Some are saying GST leviable, some are saying GST not leviable. My answer to all of you, no GST if it is part and parcel of employment contract. If this lunch and dinner is a part of CTC, cost to the company, and part of employment contract, and it's not a gift, Mr. Chakka Ramakrishna. No, it is not a gift. This is not a gift. Gift is not given on daily basis and lunch and dinner time. This is not a gift. If it is part and parcel of my employment contract, part of CTC, then there is one press release issued on 10th July 2017. Clearly says that it is not chargeable to GST. Not chargeable to GST. Now, second question, and which is again very interesting one. Your outdoor caterer is charging 5%. Am I right? 5%. You're giving free of cost to employee, When it's free of cost to employee, I have said no GST, part of employment contract. Now question comes, this 5% which is charged by your outdoor caterer, can you take credit as a Infosys? Please tell me, can you take credit as Infosys? You can't take credit till the time it is obligated. Till the time it is obligated, and this obligated provision got inserted from 1st February 2019, and normally we see obligated under Factories Act. For service sector, we do not see this kind of situation. Mr. Santi Raj, I do not know ITC allowed if provided as per the employment contract. See, as per employment contract, it is not obligated. Employment contract means if it is obligated under any law for the time being enforced, that is what the provision. So normally we see factories are covered under Factories Act, and therein it is obligated under any law for the time being enforced. So for manufacturing sector and for service sector, I find two different provisions. I given my food for thought. Now coming to the where you are recovering some money, 20 rupees per thali as against 100 rupees per thali, right? When you're recovering at 20 rupees with a GST leviable, next question. GST leviable when you're recovering 20 rupees. GST leviable, but question will come whether it is 20 rupees or 100 rupees. If GST leviable, it is on 20 rupees or 100 rupees. Rekha Parekh, Shweta, Balaji, Polanipam, Mani. Rule 28 going to be comes into the picture then. Whenever supply made between related person or distinct person, Rule 28 will come into the picture. It will be open market value, like kind and quality, 110% of cost of provision. So in all implied manner, it would be 100 rupees. Even though you are recovering only 20 rupees. Or 100 rupees GST leviable. Next question will come, what is the rate you are going to charge as a company? Infosys, 5% or 18%? Tell me 5% or 18%? It will be 5%. It will be 5%, cannot be 18%. And when you opt for the 5%, in terms of rate notification 11/2017, there is specific condition that you will not be given credit on your inward supply. So 5% charged by your outdoor caterer to Infosys, and Infosys in turn charging 5% on 100 rupees, Infosys can't take credit because of rate notification. In rate notification, there is a condition, no ITC, no credit available. Hence, conclusion which I am drawing, where you are subsidizing the rate, you are neither getting any credit, nor you are getting benefit, because in turn again you are charging on 100 rupees. That transaction is creating more cascading to you. So what is the way forward? We must change this transaction. Wherever this transaction is obligated under any law for the time being in force, obligated under law, any law for the time being in force, then only credit available. Otherwise, credit is not available. So what we should do, we should change this transaction and make it free and part of employment contract. Then that press release will come into the picture, which will help you to avail the credit. For employee to the employer, no GST, entry 1, schedule 3. Employer to the employee, we have discussed just while now that subsidized rate. One more prominent query which I normally get, notice pay. So notice pay, sometime employer gives to employee and sometime employee gives to the employer. So we always debate what is taxable, what is not taxable. To my mind, both the transaction is not chargeable to GST, whether pay by employer to employee or employee to the employer, because it continue to be under employment contract. Continue to be under employment contract. Last item which we must know, the schedule 2, it contains broadly 7 entries, and in general 18 entries. Out of 18, 5 are related to supply of goods, 13 are related to supply of services. Unfortunately, the schedule 2 reference is being done away from the supply, and it is being stated now, unless this is supply, schedule 2 only going to be used for determination whether a transaction is a supply of goods or supply of services. So what is outcome? Outcome is very simple. The schedule 2 now going to be used only to determine classification, whether a particular transaction is a supply of goods or supply of services. It is not chargeable to GST unless it is falling within 4 corners of section 7, subsection 1, supply. This is what the meaning coming out. So one particular prominent entry, para 5E, liquidated damages. I'm of the considered opinion, time is the pause, so I'm not extending my discussion too far, too fetch. I need to close by 6 o'clock. Liquidated damage per se is not chargeable to GST unless it is falling within the 4 corners of supply definition. So just liquidated damage received, that is supply and GST leviable. I don't agree. This is not the way, and this is one of the intricacies. Cannot be made taxable unless it is meant for supply of goods or supply of services. And schedule 3, I have categorically said there are 8 entry, neither a supply of goods nor supply of services. So today I have tried my best to analyze the provision, and in a chat box, Preeti has gone. She wanted me to repeat something. Preeti, are you there or you have gone? Preeti, I really want your input, because you then said carry on. Preeti, are you there or you gone? Say in a chat box, because I stopped you that I will not repeat.
She is there, sir. She is there.
She's there. All right, Preeti. Sorry, you have not taken me otherwise, but otherwise it was meant for getting your attention. For that reason only I have said, I want each one of you to be happy, because I have tried my best to give my deliberation without PowerPoint presentation. And 2 hours dedicated, you all are with me. The way you have connected yourself, all 340, 342 participants since beginning, they all are connected. And they have really continued with me and participated. Whenever I posted any query, they have responded back, and they have really, given all their input, whatever they thought. And from my side, also I have tried my best from North India to South India to connect. I say GST law is a Gita, Bible and Quran. Gita, Bible and Quran. For the region, it is applicable irrespective of any language, religion, race, and caste. So whatever GST I'm learning in Delhi, applicable to Bangalore and Cochin as well, to Tamil Nadu, Chennai as well. I have tried from my side, whatever
Yes, sir.
best I could have done on the topic. And I'm thanking each of the participants for their, love and affection. You can always get yourself connected with Bimal Jain. Believe me, I don't charge any money. And I don't charge any money. You can subscribe to my YouTube channel so that you're keeping connected. You can subscribe to Facebook, Twitter, LinkedIn, wherever you are comfortable. And you can have all regular update coming on GST from our side. We are trying our side to make GST good and simple tax. Hopefully, with your support, love and affection will grow further. And I wish each one of you a great success in your future career. Take care of yourself. COVID-19 going on, and this 2020, just you keep yourself happy. So, Jaan hai to jahan hai, as Modi ji said, Jaan hai to jahan hai. So,
Correct.
take care of yourself. That is more important for you. So, carry on. 2020 is a challenging year for all of us together. Less positive, do your part, and try your best, whatever best possible. From my side, I'm always open to all of you, and thanks once again to each one of you from core of my heart. Thank you very much.
Thank you, sir. Thank you. It was a great session. Only thing I can say, our motto is like that, Jnana Dasoha. Jnana means knowledge. Dasoha means without anything expectation, sharing the knowledge. So you have truly made it today's session from, as you said, north to south. Yeah, GST, one tax, one nation. The today's session is made it. I was observing that till 100 minutes of your session, you are not even drink the water also. But before starting your employer and employee relation, you have taken up the water. It was really a great session, sir. If anybody is a student, if listening your session, you will not go and read the book. You will definitely directly go into the examination. You will get definitely clear the CA examination. I was watching the full day normally in. Yes, sir. Yes, sir. Please.
Just one thing I would like to say with the participants as they're asking me how they can get themselves connected during COVID-19 time period. I am sharing my mobile number and email ID both in my chat box.
Yes,
You can
sir.
always get yourself connected. You can pass on your feedback, sometime query. If time permits, I will reply back to you. That would be
Really
my
great, sir.
pleasure. You
So
can take down
now,
my
yes, sir. Please, please, please.
you can take down my mobile number 98-106-04-563. You can send your queries. If time permits, I will respond back, and you can take down my email ID as well. I'm both writing in my chat box so that you can get it. No, 98-106-04-563. I'm writing once again. So this is my mobile number which I given to you, and this is my email ID. You can come back to me whenever you want. Yes, sir. Hand over to you.
Yeah, sir. It is really great session. You are starting from the connecting with the supply and the definition with the Central Excise Act 1944. Then you move on to the that really impressed that how the bad debts, really chartered accountants will get bad debts in supply when they are not getting the money, how it will be GST loss. And also you have made us that jugar, the word use jugar, definitely it will, our members will take in right spirit and make it happen. And also you have highlighted today, I was expected this Gujarat advance ruling, sir. So the your clarity it will, because many chartered accountants are expressing that how this Gujarat advance ruling came, but today somehow you have got relief from listening your session, sir. Uh, and also employer-employee relationship, how the GST can be taken, and again you have given that credit note, section 34 highlighted very well. Overall, the session very fruitful, sir. And really, we are connected north to south, and it is, I am telling, it is heart to heart. You are sharing with your mobile number and email ID to, even though you are very, very busy schedule, and you are sharing your email ID. Definitely, our members will take this benefit of Jnana Dasova, and definitely they are going to be make use of your expertise. So for them, with this in COVID situation, you are looking as a warrior for us. once again, bottom of my heart, on behalf of managing committee, members of Bangalore branch, and all the viewers, I wholeheartedly thank you and namaskar to Bimal Jain sir for our wonderful session,
Thank you.
and also all the viewers for your active participation for the Bangalore branch activities. And tomorrow is the session on critical analysis of TDS on e-commerce transaction and recent amendments to TCS provisions from another Jain. CA Narendra Jain is going to handle. So before that, I request Bangalore Branch Secretary CS Srinivas T to render a formal vote of thanks to the today's Honorable Speaker CA Bimal Jain and all the viewers. Vote to Srinivas. Your mic, unmute Srinivas.
Sir, it was an excellent session, and I can confidently and tell that, and with comfort I can tell that the topic of supply is delivered successfully to all the participants today. The amount of compliments we are getting in chat box, it shows their active participation. You made them to participate very actively. I thank on behalf of Bangalore branch of ICA for your time and efforts in sharing your knowledge. Really, it was an excellent session. Thank you, sir. And
Sir,
I also thank.
Yeah, sir. Kindly chat box. Their members are asking email ID.
Let me write down once again.
And I also thank all the viewers and members those who are actively participated in this program. Thank you all.
Yeah, sir. Please, the members kindly note that sir is giving his email ID also. So, yeah, it is bimaljain@hotmail.com. The session was very nice. Thank you, sir. Once again, I thank you. I am signing up with from Bangalore branch and all the viewers. Once again, I thank you. I hope once Corona is went down, we are physically wanted to see in our conferences in Bangalore branch.
Sure.
Really, it is impressive, sir.
So I will come.
We are looking into Bangalore, sir. Thank you.
Thank you very much.
Thank you all.
Thank you all.